Hey there. We had some technical
Hey.
difficulties. We are now live. I am on the air. I'm not sure if you guys were on the air, but we had no audio. We had no video, but we are here. We are live. It is 7 Investing now. Good afternoon. We got a jam-packed show, absolutely crowded. Joined today by Matt Cochrane, Steve Symington, Maxx Chatsko. I'm Dan Kline. I cover retail. I cover technology. I cover whatever it is that needs to be covered right now. Matt Cochrane, why don't you tell the audience who you are?
Matt Cochrane. I'm an advisor with 7 Investing. I'm also a police officer down in South Florida. I have lots of kids, and I'm happily married.
Matt says he has lots of kids because he doesn't know how many. That is my theory. Steve Symington, you have kids as well. Why don't you introduce yourself?
I do. I live up in Montana, and this is all I do. I'm a lead advisor at 7 Investing, and I've got 3 beautiful kiddos who are currently weathering phase 0 of remote learning. So that's a good time. But yeah, so here we are.
Maxx Chatsko, you do not have kids as far as I know. Tell the audience a little bit about yourself.
No kids, no wife. I live in Pittsburgh. I have like 20 houseplants. Does that count, Dan? That's some responsibility, you know?
My cats felt like kids until I had a kid. So this is 7 Investing now. We're going to cover the news of the day, but from a long-term perspective. So that we're not day traders. We buy and hold stocks. That's our philosophy here at 7 Investing. We are really excited to have you watching. Our top story today, again, we're going to talk about the elephant in the room. It can't be avoided. And then, of course, we're going to do our story picks. Each person has a story they picked. We're going to talk about those. And then we're going to follow up by talking about the upcoming console wars. I know I'm a veteran of more than one console war. And then, of course, we're going to hit our finisher. But the top story today, markets are on fire despite the uncertainty in the presidential election. We're up like 1,100 points over the past 2 days. We're lagging a little bit today. We have our theories as to why. I'm going to let Steve Symington lay out what's happening. Steve, what the heck is going on here?
Oh, goodness sakes. So putting any partisan opinions aside, we're not going to get political, so to speak here. It looks like the market's betting on a Biden presidency right now, with Democrats retaining control of the House and Republicans retaining control of the Senate. All of that's, of course, but right now that's what it looks like. Biden is known as more of a moderate Democrat. He ran in part on the platform of being able to reach across the aisle and work with both parties and get things done. But more than anything, the market likes having some semblance of certainty at this point. And remember, Wall Street hates uncertainty. And as the picture becomes more clear, investors are more willing to step back into equities. And that's part of why we saw stocks rally in recent days.
Yeah, it's absolutely just removing that sort of uncertainty. And it's one of those things where markets want nothing to happen. Like if everything freezes, that's pretty good. That's a better set of rules for investing. Matt, is it fair to say that the market might actually like the fact that Biden is predictable and really go wherever you want with that as well?
Yeah, sure. I think I basically agree with what Steve said. Look, Biden is a known quantity. He's been in Washington, D.C. for a long time. And it's not even like he won in a landslide, which could be interpreted as a referendum for big sweeping changes. And the market's probably going to like that. If Republicans hold the Senate, I generally agree with the consensus that the market will like that even more. It basically means no big changes for at least the next 2 years. It means no sweeping regulations to hinder innovative companies and generally the status quo. And I think the market's going to interpret that basically as a good thing. Before COVID hit, the economy was largely humming. And I think many people expect us to get back there after the pandemic restrictions lift.
I would like to hope so. Matt, you and I meet for dinner at a place that's not generally crowded, and it's been spectacularly uncrowded. And it's been depressing to just see that whole plaza, which is usually really lively, not having a lot of people there and sort of not doing the business they normally do. We're not going to talk about this for too long, but Max, the split control also means you're not going to see major corporate tax hikes. You're probably not going to see tax hikes of any kind. That's good news for the markets, right?
Yeah, I think a lot of Wall Street analysts were kind of figuring that if Democrats swept the presidency and the Senate, then maybe there'd be some corporate tax increases. That looks less likely now that the Senate has retained control. The Republicans have retained control of the Senate. But it's important to note that Biden was only trying to increase corporate tax rates back, like not even as high as they were in 2016. So it's an increase relative to where they are now, but it would still kind of be a tax cut relative to 2016. So perhaps not out of the question. And again, there's more Senate elections in 2022, and that map could be more favorable to the Democrats. So right now, more certainty, same corporate tax rates, but could change in 2 years.
So, Matt, you wanted to talk about a bearish scenario for split government. So we're going to end this on a down note. Matt, your thoughts there?
Well, sure. Last night, I just tweeted out a quote from Jesse Livermore on Patrick O'Shaughnessy's podcast, Invest Like the Best, from last month. And he said, actually, his most bearish election scenario would be if Biden won the White House and Republicans the Senate. And his reasoning was that it might make it harder for a large stimulus bill to be passed if Republicans rediscover fiscal responsibility, or if the two sides can't agree where stimulus money is needed most. And it looks like that might already be happening. Just before we went live, I tweeted this out. It's being reported that Senator Lindsey Graham was talking about becoming the Senate's budget chairman and wants to begin looking at the national debt. And, look, again, that might ding the stock market in the short term. But look, we don't invest based on what stimulus bill the government might or might pass. And that might affect things in the short term. But if your thesis depends on stimulus spending packages, you might want to reevaluate your time horizons on your investments. Think longer term, invest in great companies at good valuations, and not on what companies might benefit the most from government spending bills.
Yeah, and the good news, everyone, 7 investors, is that this will end. At some point, we'll have a winner. At some point, we'll finish the runoffs in Georgia. And for at least a few months, we won't have to talk about elections. And I think that's something many of us are looking forward to. Remember, no matter what platform you're watching this on, you can share comments with us, and they will show up, in theory, in the Restream chat. That's where we're taping this. Now, we're not 100% sure that's going to work. We've had our Restream problems today, but we are seeing some comments, and we'd love to hear from more of you. Rayal says, these are way better than my company Zoom meetings. Well, I hope so. I don't think anyone's trying to be entertaining at the company Zoom meetings. And he also says, reveal the 7th horseman now. We're actually going to reveal the 7th advisor for 7 Investing. That it's in the name. It's right in the name, 7. There's going to be 7 of us. And of course, we have an amazing behind the stage team like Samantha Bailey, our director of marketing, our producer here for this show. On the 11/11 show, Simon Erickson, our CEO, one of our advisors, is going to come on and tell you who the next person is to round out our team. And what does our team do? Our team makes 7 picks every month. How do you get those picks? You give us $17 a month or $170 a year. Steve, what do they get besides our picks? And believe me, the picks alone are worth it.
Oh man. So, I think that's what everybody's excited about at first, is getting those 7 recommendations every month. And, we're happy that we're outperforming the market so far. We think the best is yet to come, but we also provide continuous updates on our recommendations. We also have subscriber only Zoom calls where we talk about our picks and talk about which stocks are most compelling to us now. You have access to our advisor team. You can ask us questions at any time, and we're happy to talk shop because, well, that's what we do and that's what we love. So I think that's maybe the biggest thing, is that you can chat with us directly, and we love it.
So if you'd like to join, and we hope you do, you can go to 7investing.com/subscribe. Now it's time for what we're watching. In this segment, Matt, Max, and Steve, we're going to have to not have Matt and Max on the same shows. That is very tricky to say. Matt, Max, and Steve each picked one topic they wanted to talk about. We're going to start with Matt. Matt, you wanted to talk about Square earnings. I'm guessing the numbers were strong.
Yeah, absolutely. Square had a great quarter, which it announced yesterday afternoon after hours. Revenue was up 140%. Gross profit was up 59% year over year. And I think 3 things stood out from the shareholder letter. The first one was that international expansion in the Square seller ecosystem is finally really beginning to drive growth. Seller gross payment volume in markets outside the US is now 11% of Square's total seller gross payment volume. And that's up from just 6% last year. In markets outside the US, seller gross payment volume grew 46%, but in online channels, that number grew over 60%. And a lot of this is because Square is finally making its full ecosystem of products and services available in foreign markets. And as those become more available, I expect to see more international growth out of Square. The second thing was Cash App's increased functionality.
Yeah, Matt, let me jump in. Before you talk about that, why don't you explain what Cash App is? Because I don't think that's a product everybody knows.
Sure. Well, you could almost it's an app where it began as like a way to send P2P payments or peer-to-peer payments, kind of like PayPal or Venmo, even where you can just send money to your friend. And they've just continued to add more functionality to that app over time. Last year, they let people buy Bitcoin on it. They let people now can pay in stores that have the Square point of sale system up. And now they've like allowed people to buy stocks through it. And more than 2.5 million customers, Cash App users, bought stocks using Cash App this quarter. So that's like up great. Its gross profit, Cash App's gross profit was up over 212% year over year. So it's really just as they add more functionality, people are finding more ways to use it, which was obviously like the point, and people are using it every day now.
Matt, as we finish up here, let's talk a little bit about their innovation. They keep adding functionality, and that's a good thing, right?
Oh, absolutely. Absolutely. Every quarter, this team produces more innovations into its services and products that it offers its customers. So this quarter, a lot of work was done in Square Payroll with instant payments and on-demand payments. And basically, both of those just allow employers to pay their employees like instantly or even get cash advances up to $200 if they have a Cash App account. And so that's just further integrated seller and Cash App ecosystems, which is really the long game Square is playing.
Thank you, Matt. We're going to pivot to Max now, who wants to talk about Biogen's Alzheimer's drug candidate. They're actually talking with the FDA as we speak. I know people, you don't want to leave this meeting to go watch the FDA meeting. Max has got you covered. What's happening right now, Max?
So right now there's an AdCom meeting. That's abbreviation for Advisory Committee Meeting. So Biogen has a drug candidate that it studied in like 3 different studies about a year or 2 ago in Alzheimer's. And they pitched it as, well, this could maybe slow the progression of Alzheimer's disease. They then actually halted the development because it looked like it wasn't working. Everybody said, oh, okay, another failed Alzheimer's drug. No big deal. Then 2 months later, they came out and said, wait, we found this one little piece of data that shows maybe at this one dose, if it's the right day of the week, it kind of works. And so everyone said, oh, man, wow, this is going to be the next big Alzheimer's drug, meaning the first big Alzheimer's drug because there aren't any treatments. So we just got this week the advisory committee meeting. So that's not the actual FDA, but the FDA will convene panels of independent experts. So these are like scientists or patient advocacy experts. They come together, they look at all the data, they say what needs to happen for this to be approved, and then they make a recommendation. But then the FDA, the actual regulators, have to come in later and actually approve or deny the drug. So on Wednesday, the briefing notes of the meeting that's taking place right now leaked, and everybody kind of cherry picked it to say that this is going to be favorable. And Biogen's market cap went from 38 billion to 55 billion. So that's a huge jump, very unusual for a company of that size. But I think people are probably getting a little carried away. So the AdCom meeting is going on now. They'll vote, and no matter what the vote is, the FDA can still go in the opposite direction. So I think the most likely outcome, given what we know, is that the FDA is going to say, hey, you guys need to run more trials. And I don't think those trials are going to come out very favorably for Biogen. So right now the stock is halted from trading, but I wouldn't get too carried away with it just yet.
So, Max, if this drug only sort of works, but it gets approved, does it matter that it doesn't work that well? Will it still sell a lot? Because people, obviously, if you get an Alzheimer's diagnosis, you're looking for anything that might help.
It might do well just for that reason, but we've already seen this year that actually the most favorable AdCom vote in the history of the FDA to get denied happened this year, and it was a vote of 9-1 from the AdCom committee. And the drug was for pediatric graft versus host disease. It's already approved in other countries. It actually had a successful clinical trial, and the FDA still came back and said, nope, you have to run an additional trial. We don't like what you see. We don't like what we see here. So I think that's absolutely going to happen here.
Max, I'm going to take one comment. It's not exactly related, but it's from TJ McKinney. What's your takes on companies offering psychedelics and their future therapeutic uses? Don't comment on the specific companies, but that overall category is one we get asked about quite a bit. Do you have any thoughts there?
Yeah, so there was actually a study that made the rounds yesterday about the active ingredient from mushrooms and in depression, and it actually looked like it worked about 4 times better than currently marketed depression treatments. So I think everybody kind of got really excited there. The thing to remember is, there are multiple clinical trials underway from multiple companies, research institutions, the government's running some. So this isn't necessarily like, I don't know if you can pick one company or another. And if it does develop, which it looks like it might, and it might be very effective, it's going to be a very competitive landscape. So I would wait until we have actual clinical results, though, from more robust studies.
Yeah, and this is one where with psychedelics, with cannabis, with any of it, don't try to chase it. Like, I understand if it works, there'll be huge potential growth. There's also going to be a lot of companies that don't make any money. So be really careful when investing in this space. Steve, we're going to go from psychedelics back to the real world. Zillow, their third quarter report was really good. Shares are up about 14% in response. Give us some of the highlights.
Oh my goodness. So funny thing is, you look at their headline numbers and they might not look great at first glance. Revenue is actually down 12% year over year, 657 million. And I'll get to that in a minute, but they crushed estimates. Estimates called for 572 million. This is a beat of 85 million. Adjusted earnings arrived at 37 cents per share. That was more than triple estimates. That actually swung from a loss of 12 cents per share a year ago. And they actually turned in a GAAP profit too, when you actually exclude things like stock-based compensation and such. But really the source of their outperformance was growth in both the internet, media, and technology segment. That's the IMT segment, if you look in their press release, and the mortgages business. They took advantage of a lot of refinances with mortgage rates at record lows. And revenue from the Zillow offers iBuying business is what actually caused that top line decline. It was down 52% year over year. But remember, they only just recently relaunched Zillow offers after suspending the program during the initial height of the pandemic and related lockdowns. There was a lot of uncertainty. Stock actually crashed really hard in March temporarily, but it's been on a tear since then. So what's really cool, though, is Barton in his shareholder letter, Rich Barton, the CEO now, talked about basically two big tailwinds that have kind of emerged as the years progressed. He said basically residential real estate and the adoption of technology, more people are kind of rethinking how they live and how they work. And he calls it the great reshuffling across the U.S. And basically, combined with people turning to new technology, being stuck at home, oftentimes working from home, they think that these are going to be sustained tailwinds, and their guidance reflected as much. So when you look at guidance for revenue of 709 million to 748 million in Q4. That's actually down 23% year over year. But again, crushed estimates. They're rebounding a lot faster than anybody expected.
Yeah, and, Steve, let me jump in here. So the real estate market is in general on fire. As some of you know, my wife and I are looking to rent out our condo, which will happen in a second, but we can't find a bigger place to live. That's our goal, was to have more space because we're all stuck at home. The second things go on the market, they disappear. You have like 3 hours to look at them. I think some people are making, rental deals when they haven't seen the property, just taking a virtual tour. Is Zillow sustainable in a mediocre real estate market? Like, I feel like you and I could do just fine in this market. Like, I don't see the margins for this company when it's just kind of a blah market.
Yeah, so I guess that's the interesting part, is they have a couple different areas that they're deriving revenue from. And right now, one important thing to note is the iBuying business, Zillow Offers, is still unprofitable. I think they turned in a segment loss of like 79 million, but the company as a whole generated a GAAP profit, which really surprised a lot of people. And I think even in a mediocre market, because they have these multiple segments, and because the iBuying section of the business is purposefully unprofitable at this stage, they really haven't reached nearly the scale they want. I think they've they're ramping toward a sustained profitability regardless of the market. And as more people turn to technology, and keeping in mind technology and online real estate platforms still only command a sliver of the overall real estate market, as they scale, I think it will prove sustainable. And one more thing before we move on, we'll also note a lot of people were kind of scratching their heads because Redfin, which usually kind of trades in tandem with Zillow, is down today. I think about 3%. They reported pretty strong earnings that also beat estimates, but the gravity of their beat, I think, wasn't nearly as strong. And so shares are down a little bit, partially because Redfin is up so much more year to date. I think Zillow started the year at $45 a share, and it's basically 2.5 times that right now. But Redfin has basically quadrupled or quintupled from its lows, and it's so pulling back 3%. Meh, doesn't really matter. Either way, I think there's room for multiple winners, and I think both companies should prove their momentum should prove sustainable as technology takes over the real estate industry.
Steve, let me push back a little bit about iBuying. So here's how iBuying works. I want to sell my house, and let's say I think my house is worth 300 grand. Zillow comes in and says, well, if you don't want any hassle, I'll pay you $290 for it. And they're paying them maybe a little better now because they're intentionally not, but they're not going to get it at a big premium in most cases. They're going to get a small premium. And then they come in and they have a team and they maybe do some little things to make it nicer. And they list it for, say, I don't know, 308. And they hope there's a bidding war. But that to me seems like a lot of risk for not a lot of profit. And I recognize they don't disclose what their formula is, but it really seems to me like you're taking on all these assets to make like 2 or 3%. It doesn't seem worth it to me.
I would say I'd counter that by saying it's less risk than you think, because they have the luxury of being very selective in the homes that they buy, and Zillow in particular is scales. You look at I think they only they received, I think when they first started this, like 80,000 requests for a quote, and they only accepted a couple hundred of those, and it's basically like where they know it can be a sure thing as they ramp. And that's also why they each have separate revenue generating avenues, basically. So Zillow from its real estate advertising business, and Redfin when you look at realtor commissions and kind of undercutting the existing cost structures, it goes with super cheap commissions. So I think either way they can just use this as a supplementary source for growth, and also something that feeds their mortgages businesses and other kind of surrounding transactions for those real estate markets. So I think it just basically serves as sort of another tailwind accelerator for their growth, and they can kind of use the network effect of these transactions to build their businesses.
I'd argue that the mortgages business is the real business, because in the realtor business, 6% is your top. So you can go lower than that, but what are you doing? You're putting all this work in for 2%. Now, if you do that and you sell the home inspection and you sell a mortgage and you sell insurance, that's when their business gets interesting. Guys, but we're going to pivot to console wars. But before we do that, right now on our rundown, on the sheet I'm looking at here, I have named this segment Near End Segment. This segment needs a better name. If you want to have an idea for what we should call the next to last segment of our show, because we close with our finisher, which is a professional wrestling term. If you have an idea, you can hit us up at 7 Investing, or you can throw it into the chat right now. But for the poorly named Near End Segment, I will go through the room. Do you think both Sony and Microsoft will be big winners as we kick off the 5th round of the console wars? Let me give a little color here. Both Sony and Microsoft in the next few days are going to release their next generation console, but Microsoft is doing something very different. They're offering what I would call hardware as a service, where you can buy the new Microsoft console and pay for it on a monthly plan, sort of along with the Xbox service you are already paying for. I think that gives them a big advantage, but let me let Matt Cochrane weigh in.
Sure. Well, like the first thing you should know is that this is like a much bigger deal for Sony than it is for Microsoft. Like the Xbox line item, like revenue for Microsoft is probably like its 20th most important thing to look for in Microsoft. For Sony, it's a very big deal. And yeah, I do expect them to get a bump on this in their new consoles. Microsoft's like Xbox service, like not just for their hardware, Dan, but also their Xbox Game Pass, like especially they bought Bethesda Studios last month or a couple months ago, which was a big acquisition for them. Gives them some more game titles to put on their Game Pass. Satya Nadella, the CEO for Microsoft, really understands the importance of gaming going forward, and it's much more than just their console, the Xbox for Microsoft. And yes, I do think that is important. They also have HoloLens, which is like their AR platform, which it's not big for consumers yet, but you could see that one day. So for Microsoft, like this isn't really, I don't think this is a needle mover. For Sony, I think it's a big deal.
Max, you're a millennial, but I'm pretty sure you're not a gamer. What are your thoughts? You haven't lived through as many console wars as we have. I go back to the Atari 2600. I traded in my Pong. I literally had Pong on a black and white television for an Atari 2600 and played Pac-Man for like a month. Max, your thoughts here?
Well, actually, I am a gamer. I started with a Nintendo 64. It was like 98. I think I was 8 years old. But I was playing Duke Nukem. I don't know what my parents were thinking for an 8-year-old. But anyway. But yeah, I currently play PlayStation 4. So I actually found this cool statistic. It's from a SEO consulting firm called Rise at 7. We're 7 investing. They're Rise at 7. It's a beautiful thing. So I didn't want to post it in our Slack because, Dan, you know how Steve and Matt are. They would have stolen it, right? So this is my talking point. But they went around and they found who is searching for information in what countries on either the PlayStation 5 or the Xbox Series X. And then they went and aggregated that. And overwhelmingly, more people are searching for information and making orders of the PlayStation 5 over the Xbox Series X. So I will. I'll tweet out that link after the show, so everybody can look at the this cool little infographic they put together.
I'll promptly.
Yeah, I think there's actually a reason for that, and that's there are launch titles for the PS5 that are going to be available right away. I don't believe the launch lineup for the Xbox, whatever they're calling it, is going to be as strong. So there's less incentive to do it. They're also both sold out everywhere, so we're not going to learn the answer early flow of this. I can't read your name. Doris Renee Carl says, loved Pac-Man and Super Mario. SoFi Marketing says, have you seen Max's PC? Total gamer. Laugh out loud. Steve, what are your thoughts here? Will there be a winner? Can they both win?
Well, first, it does renew my faith in Max's millennial status that he actually games a little bit. So that makes me happy. He's like the worst millennial otherwise. But I think they both win in their own ways. I think it's a bigger deal for Sony, and like Matt said, and I'm happy we heard from Matt first because he's sort of the expert in Microsoft matters. But it's true that Xbox is not as big a deal to Microsoft. But I'm more excited down the road for cloud gaming services, game streaming services. So I'm not that excited for console wars and everything, but I would really like to see how Microsoft's sort of hardware as a service pay-as-you-go model for the next gen console plays out, and whether it actually spurs sales, because PlayStation and Sony's consoles generally outsell the Xbox and by a wide margin anyway, and obviously a bigger deal for them. But I'd much rather own shares of Microsoft as a consolidated business, because I'm less impressed with the rest of the pieces of Sony's company. So that's kind of where I stand.
Steve, let me ask a follow-up here. So many of us pay for our phone as hardware as a service. This is the new iPhone 12 Pro, and I finance it. I pay every month on my T-Mobile bill, and at the end of the year, I trade it in. They actually gave me some money back, and I get the new one. And that's how I do it. Do you think we're going to do this with not just consoles, but maybe things like our laptops and other devices that we're constantly upgrading, where it's going to become like leasing a car, where we just have all these payments, but we're constantly having the newest thing?
Yeah, I think that's kind of where a lot of it goes. And we've already seen some of that with the little small lenders and pay-as-you-go platforms that are out there. So I think that's how some of these bigger purchases go. They make it more seamless, because otherwise it'd be hard to fork out, $900, $1,200 for a phone when we needed it. Nobody, it basically spurs adoption, makes it easier to swallow. I think that's the way we go going forward. So yes, an answer.
So let's go around the. I'll be getting my son the new Xbox. Maybe not exactly at Christmas. I'm not going to chase it if availability is a problem. He's not really clamoring for it, but we'll absolutely buy that one. I'll start with Matt. Matt, are your kids asking for it? Are they going to be getting the new Xbox or the new PlayStation 5?
They will. It probably won't be this Christmas. It'll probably be next Christmas. Like I don't feel the need to like go out and get it right away. But yeah, we're an Xbox family. And my son is on Xbox a lot, and he's 14 years old. And at some point we will probably get the new Xbox. Just might not be immediately.
Steve, your kids are a little bit younger in general. Are they asking for this even? Do they know what this is?
No, my 10-year-old boy knows what it is, but he's not asking for it. I think we're in the good enough camp with the current Xbox One, and he's perfectly content. And I have no real drive to personally spend the cash on a new console. But yeah,
is there a Nintendo Switch in either of your houses?
yes,
There's not. No.
There is in my house, Matt. Matt, if you come over, bring the kids, you will then have to buy them a Switch. It's dumb fun, but it's really fun. And the fact that it's portable is really useful. Max, you can have the last word here.
Yeah, so I think my mic cut out when you talked about, do I have kids? No kids, no wife. What I said was I have about 20 houseplants, Dan. So my houseplants will not be requesting either console. But so I currently play PlayStation 4 with my buddy. If he peer pressures me into getting an upgrade, maybe I'll get the PlayStation 5, but not currently on my radar.
Yeah, I'm the kind of sucker. I know I'm going to end up with all of them. We have an Xbox One, or whatever, if that's the current Xbox. We have the current Xbox. We have the current PlayStation 4. We have the original Nintendo Switch, the higher end model. So I won't even pretend I'm not going to end up owning both of these. Joey Kline says, my gaming life started at 6 with Sonic the Hedgehog on the Sega Genesis that I got for Christmas 1991. I had a Sega Genesis in 1991, but I was in college. Guys, now it is time to close the show and hit our finisher. There's actually a funny story about that. So my college roommate, went away for like a month. He went to England over our 6-week Christmas break. And I thought he had taken our Sega Genesis home. He was home for one night before he went away. And I was working on campus with no one else around. And I was furious with him the whole time. I did not realize we'd been robbed. The robbers stole our Sega Genesis and a $3 bottle of wine that came with a $2 rebate that we were saving for some reason. So clearly we were robbed by like a 14-year-old. But it took us a month to figure it out because he was away. And this was 1991. It wasn't like I could text him. Like, talking to someone who was in England was difficult. But guys, time to hit our finisher. This was a Matt Cochrane poll that got a stunning amount of votes. 1,700 votes. That is a really big number. Matt asked, what big tech company would fare the best in a split government scenario, e.g. a Biden White House split Congress, by rewarding shareholders with the best returns over the next 2 years? Apple, Amazon, Facebook, or Alphabet? Apple got 16.4% of the vote. Amazon got 38.7% of the vote. Facebook, 26.4%. Alphabet, 18.4%. Matt, do you think that's because Amazon has been sort of an enemy of the current president? I think it's fair to say he has not been kind towards Amazon.
Yeah, I don't think it's any secret. I mean, Bezos owns the Washington Post, which I think is a lot of a root of a lot of the problems there. And Trump has this beef with the Washington Post, and I probably took it out on Amazon publicly. So I think look, personally, I think there was very small possibility of Amazon being regulated against or like having an antitrust suit winning against Amazon. But however small that possibility was, it goes away now. But personally, I think Facebook and Google might actually fare the best in this kind of like split government scenario, where it's going to be very hard to find a consensus on how to regulate those companies. But we'll have to see.
Steve, Max, I'll let you weigh in. Realistically, I look at all four of these companies and take any sort of personal bias out. I think you'd do pretty well owning any of them. Steve, is that reasonable?
I think that's a pretty reasonable observation. I think you're fine in either one of them. And I definitely see why most people voted for Amazon in this instance. But I do think that your Facebooks and Googles of the world tend to fare better in this scenario, in a split government, when it's harder to regulate them. So I definitely voted for Facebook in this poll. I think they had the most to gain if it's harder to push regulations on them. So that's but I think either way you're going to be fine. This is a pretty decent.
Maxx Chatsko, I'll let you have the last word here before we close out the show.
Yeah, I mean, we talked about this the other day, like I think maybe investors look at them and, they're so large. These are $1 trillion or $2 trillion companies, but I mean, they're still growing at double-digit clips. So, there's reasons for that, and that should continue for the foreseeable future. So, yeah.
Guys, we started with technical difficulties. I don't know what the beginning of the show looks like. I don't know when I was on. I'm not sure what I said if I was talking. I showed as not being on air. I think I might have been on air but not had audio. But we pulled it out. We might be able to do some editing, make this look better in the replay. But that finishes up the Friday edition of 7 Investing Now. If you have questions for us, you can reach us at info@7investing.com. In general, Steve monitors that, and he'll get back to you right away, like 2 a.m. Like, we actually make Steve get up every 15 minutes like we had a newborn. No, we don't do that, but we get back to you quickly. If you want to follow
people
us,
wonder sometimes. I will. I'll look. I'll be like, oh, an email, and I'll answer it at 1 a.m., which is my wife's like, put your phone down.
I've had that too. It's 2 a.m. The cats wake me up, and generally, I will check my email. I will respond on Twitter. Danny says, I missed Square earnings. Darn. Here's the good news. This show repeats on our YouTube channel. It will immediately be available. It will immediately be available on Twitter, on wherever you can watch shows. We're working out even more platforms. So you didn't miss anything. You can go back and hear us talk about Square earnings. That's it. We're done. It's time for the weekend. Hopefully Monday we won't have to talk about the election. For Matt, Max, and Steve, I am Dan Kline. Everyone have an excellent day.